Before the skyscrapers pierced the clouds, before the bullet train sliced through the countryside, there was a different China. In the 1970s, to be Chinese was, for most, to be a farmer. The land was communally owned, a patchwork quilt of collective farms. Families lived in simple homes, food was rationed, meat a rare luxury. The Cultural Revolution left scars. Individual ambitions were dangerous. The potential of a billion people lay dormant, waiting for a spark. This was the baseline from which a transformation would launch. The change came in the form of a man, Deng Xiaoping. Having witnessed past failures, he turned from ideology to pragmatism. It doesn't matter if a cat is black or white as long as it catches mice. In 1978, the household responsibility system linked hard work to personal reward. Agricultural output surged. The results were swift and staggering. Deng created special economic zones, laboratories for capitalism. A small fishing village named Shenzhen became his great experiment. He grafted a market economy onto a communist political structure, a daunting gamble. The CES were windows. A closed China began to peek out. Foreign companies crossed the border, drawn by cheap, disciplined labor. Chinese delegations went out to learn factory automation, stock markets, management. The transfer of knowledge matched the flow of capital. The state built infrastructure, ports, power, rail, to fuel growth. Fear of foreign contamination eroded, replaced by confident ambition. What started in the south expanded along the coast, and the trickle became a flood. The door Deng cracked open began to swing wide, and the world came in. A great migration began, the largest in human history. Families said goodbye to village life for the anonymity of factory dorms. These hands assembled the world's iPhones, sneakers, televisions. Shifts ran 12 hours, 6 or 7 days a week. Relentless repetition, yet wages transformed lives. Remittances built houses and paid for education. Cities, suppliers, logistics, and ports formed an industrial ecosystem. China became the final, crucial link in global supply chains. The scale was breathtaking. Entire cities built around production. Profits were poured into concrete and steel. Entire skylines rose in a matter of years. Pudong became iconic. A new urban middle class emerged. Educated, brand-conscious, digitally savvy. Mega projects. The Three Gorges high-speed rail declared technical mastery. A generation with no memory of the 70s arose, ambitious and global. Domestic consumption became a new engine of growth. The transformation fueled national pride. The future seemed guaranteed. But underneath the glitter, new questions about sustainability arose. In 2001, China joined the WTO, a seal of global integration. Membership supercharged exports and rewired supply chains around China. China moved from toys and textiles to high-tech electronics and R&D policies like Made in China 2025, aimed at dominance in robotics, AI, semiconductors. The Belt and Road Initiative seeks new markets, a modern Silk Road. China built infrastructure and influence worldwide. Its footprint grew. Its voracious appetite for raw materials drove global commodity booms. From sleeping giant to global power, China's decisions sent ripple effects globally. For decades the model seemed invincible, but cracks appeared beneath the surface. Property became the primary engine, the sure way to build wealth. Developers built on the assumption prices would rise forever. Ghost cities emerged. The sector swelled. Debt-fueled growth became the norm. The state cracked down with the 3 red lines, cutting off cash to deady developers. Evergrande buckled under hundreds of billions of dollars in debt. Millions who had paid up front were left with concrete shells and mortgages. The result was a mountain of unproductive debt. The low-hanging fruit has been picked. Beyond finance, a slower crisis looms: the demographic shift. The one-child policy, implemented in 1980, was brutally effective, but left a cliff. In 2023, China recorded more deaths than births. The population is shrinking. Young people face high housing costs and education burdens. They choose fewer children. The 4-2-1 problem. One child responsible for 2 parents and 4 grandparents. A shrinking workforce means less dynamism, less innovation, a smaller consumer base. Pensions and healthcare face enormous pressure, a potential fiscal crisis. China is racing to automate and innovate before demographic drag becomes irreversible. The era of engagement with the United States has given way to intense rivalry. The first front was trade, tariffs on hundreds of billions of dollars of goods. The real battle is over technology. Microchips and equipment are the new leverage. The United States imposed export controls and blacklists to slow China's advance. Beijing answered with massive state-funded push for self-sufficiency. Who wins the tech race will shape economic and military advantage for decades. the external environment has turned from tailwind to headwind. The narrative of an unstoppable miracle has collided with a harsh new reality. China stands between immense achievement and deep structural problems. The outcome will define the 21st century's economic order. Will China surpass the US Oregon? Is its economic miracle slowing down? Before you go, we want to hear from you. What do you think about China's future? Will it keep rising? Or are bigger challenges ahead? Drop your thoughts in the comments below. If you enjoyed this deep dive, hit that thumbs up, subscribe for more fascinating stories, and tap the bell so you never miss an episode. Your support helps us bring more incredible content straight to your feed. Let's keep the conversation going. Like, subscribe, and share your perspective. Thanks for watching.